Good afternoon, everyone. Welcome to Omkar Ki Pukar. So let's begin with the show. So just quickly recapping what we had discussed in this few trading days. So earlier, the level of 17,775, we had been pretty much clear that that was going to act as a strong support for the prices, and we nevertheless saw any kind of penetration sustaining below the specified levels. And just in with reference to the current context, we also had mentioned that the 20 days simple moving average was acting as a proxy to the bearish trend line, which prices had respected quite a multiple times. And this 20 days simple moving average was going to be a very crucial thing for the prices to surpass on the upside. Now, just having a look at the current price changes to what we had since 2 days ago, we can see that prices have penetrated the 20 days simple moving average and indicated a first positive sign for the prices to move on the higher side. Coming to the intraday charts, and again on the 16th of January, we had been one more thing we had been pretty much clear about the support level of 17,863. So with regarding to this level, we saw that prices are showing change in the polarity, while the resistance which was placed around a level of 17,863 earlier now was acting as a support around the date of 16th of January. So that was another sign that prices wanted to move on the higher side, while in the latest trading session, that was in the yesterday's trading session, the level of 18,050 was pretty much clear on the upside, and we had been pretty sure that once the level of 18,050 is taken on the upside, we can have a good rally for around about 200 150 points, and we actually witnessed that rally in today's intraday trading session. So the view is still intact. We are quite placed very well on the charts, on the short term charts as of now, until and unless the level of 18,000, the psychological barrier again. Now this earlier was acting as a resistance, now this will act as a support for us, and the level of 18,000, the very clear psychological barrier. Until and unless that is protected on the downside, every dip must be considered as a buying opportunity from here on. While on the higher side, the level of 18,265 is now going to be a very crucial mark for the Nifty on the upside to face. And over here, if you'll have a look, we can see multiple times the prices have tested, and some or the other way the index had witnessed a strong selling pressure from that level. So next level where we'll review Nifty would be around the level of 18,265. Coming to Bank Nifty, again with the Bank Nifty, the levels were pretty clear. On the downside, it was 41,760, followed by 41,570, and it was in a broad range. We have also witnessed a breakout from the triangle pattern, and we actually saw a retest over here. And now over here, if you'll have a look on the 15-minute charts, Bank Nifty is trying to form a inverse head and shoulder pattern, though the pattern confirmation would only and only be above if we get to see prices sustaining above the level of 42,600 mark. So the forecast, let's focus it once the prices are able to sustain above the level of 42,600. Until and unless the Bank Nifty also is quite on a good side, we can see prices taking support on every dip over here. Prices initially took support from the prior swing highs, then from the moving averages, from the shorter as well as from the longer term moving averages. Now quickly moving to the stocks. So we can see that the index is placed at a very good position, but there are stocks where we can witness some kind of selling pressure. So one of the stock is ICICI GI. Over here, if you'll have a look, this is the daily chart of ICICI GI January futures. Prices in the latest trading session has opened clearly on a very gap down with a very high volumes over here. You can see this looks like a double top kind of pattern to me, and the breakdown is confirmed as we have actually witnessed a strong volumes and also a gap. Moving to the intraday charts, just look at this structure. We can see multiple rejections coming from around the level of 1210, and the year around the current level. It looks like a good shot for the near term opportunity for a day. You can consider for STBT, you can consider it, while on the upside the level of 1214, that is nothing but the high swing high would be our stop loss, and the level of 1070 would be our stop loss. So over here the overall chart pattern, it's a clear breakdown on the downside, and we can expect the current momentum to make the prices go much more lower till the level of 1170, while on the higher side the swing high that is placed around the level of 1213 would act as a strong resistance to the prices, which can be capped as a stop loss. So that's it for today. Hope you like this video. Make sure that you are subscribed to GPL's YouTube channel. Thank you.